learn with joy.
Hi, hello, champions. Good morning. Before starting the video or before starting the class today, just I want to share few things with you. Actually, I'm very happy that many students has started watching my videos. I'm happy about that. And one more thing, students has questioned me that, sir, without uploading the activity-based costing, you started uploading the cost accounting system. So I'm going to make the video on that also. Today, in this video, I am going to complete the reconciliation of cost books and financial books, and then I'm going to upload the video based on the activity based costing. Okay, now without wasting the time, let us start with the reconciliation of cost books and financial books. We all know that there are few companies which has to maintain the cost books, so obviously they have to maintain the financial books also. This reconciliation will come into the picture when they follow non-integrated system. In case of integrated system, both the books will be clubbed. There is no requirement of the reconciliation. In non-reconciliation system, we have to maintain the cost books separately, financial books separately. Cost books will give the cost profit and financial books will give the financial profit. We all know that how to arrive the profit. In cost books, we have to prepare the cost sheet to calculate the profit. In financial books, we have to prepare the P&L to arrive at the profit. Once we arrive at the cost profit and financial profit, this difference we have to reconcile. Before proceeding further, let us understand what all the transactions that can create the difference. What all the transactions that can create the difference between cost books and financial books. Okay, now see here. Here I clearly stated what is the need for reconciliation of cost and financial books. Number one, reasons for the difference. First, we need to identify what is the reasons for the difference in cost books and financial books. Number two, to check the accuracy. See, when you prepare the reconciliation statement, if it is not tallying, then there is some mistake in the cost books or financial books. Are you understanding this? And one more thing, before getting into this, you already have the idea. You already have the idea about the reconciliation in the foundation level. That is bank reconciliation statement. There we are comparing cash book with the passbook. Here we are comparing cost profit with the financial profit. Ditto same. Ditto same. And format is also same. Are you understanding? Next. So as I told you, it is about checking the arithmetical accuracy. There are two purposes: identifying the difference and to check the arithmetical accuracy. Now it's time to understand what are the reasons for the difference. What are the reasons for the difference between cost books and financial books? Number one, items included only in cost books. Items included only in cost book. So what kind of items can be, what kind of transactions that will be included only in the cost books? Please understand notional expenses. Notional expenses will never account in the financial books. Will account only in case of cost books. So what do you mean by notional expenses? Imaginary expenses. I'll give the example. I'll give the example to understand this. Number one, rent paid. No, I call it as notional rent. Actually, we'll be calling it as the notional rent. Sir, what is this notional rent? Suppose if I'm starting business in my own premises, I'm starting the business in my own building. For that building, am I going to pay the rent for myself? Absolutely no. It's my own building. I'm not going to pay the rent. But in cost books, we are going to account it as notional rent because it is my opportunity cost. By starting the business on my own building, I'm losing the rental income. So it is my opportunity cost. So I'm going to book it as notional rent. Am I going to pay the salary for myself? Again, the answer is no. I'm going to book it as notional salary. Are you understanding? So what all the opportunity costs are there that we are going to consider in the cost books, which we are going to call it as the notional cost. Which we are going to call it as the notional cost. Look at here. Notional interest on capital, notional rent on premises. This is, there is a typing error. It is notional rent. Okay, now notional rent on premises owned, notional salary to the proprietor or partner. These items will form part of the cost books but not in the financial books. Now it's time to understand transactions considered only in financial books but not in the cost books. Only in financial books but not in the cost books. Look at here. Financial books, cost books. In financial books, we'll be accounting both. Whereas in cost books, we'll be accounting only operating activities. We'll be accounting only operating activities. So please understand, entire activities of the organization will broadly classified into three categories. You would have already come across in the cash flow statement or fund flow statement: operating activity, financing activity, investing activity. In cost books, we'll account only operating activities. In cost books, we'll account only operating activities. Whereas in financial books, we'll be accounting both operating activities and non-operating activities. Here it is only operating activities. What is the difference? Non-operating activities. Items included only in financial books is non-operating activities. Items included only in cost books is notional expenses. Are you following the discussion? So, sir, what is this non-operating activities? Sir, what is this non-operating activities? Again, two categories: financial activities and then investing activities. Financial activities and then investing activities. Sir, what is this financial activities? What kind of expense possible? What kind of expense possible? Interest paid, dividend paid, loss on sale of fixed assets. So, simply I can tell you, let me put it very simple. All balance sheet items. Financing activities means liability side, investing activities means asset side. All balance sheet items will be considered only in financial books. Balance sheet items will not be considered in cost books. Are you understanding? All of you. So, look at here. So, classification of activities has been given. Operating activities, non-operating activities. Now, the point is both will be considered in the financial books, but operating activities considered only in the cost books. So what is the difference mean? Non-operating activities. Non-operating activities is the transactions which create the difference between cost books and financial books. Clear? Now, I given the example for the non-operating activities. What are the examples? Incomes, profit on sale of fixed assets, profit. I told you now all balance sheet items. All are balance sheet items. Profit on sale of fixed assets, profit on sale of investment, interest income, dividend income. Let me clarify the transfer fee. Many people have the doubt on this transfer fee. What is this transfer fee? Means share transfer fee. The companies will maintain share transfer offices. They'll maintain because one member has to transfer share to another member means there will be share transfer office. At present, it is not there. I'm speaking about 1990s. Those times there is a share transfer offices. There will be separate office. Suppose if I want to sell my shares, which is in dematerialized form. Sorry, it is in the materialized form. Now it is dematerialized. We are trading through demat accounts. But olden days, they'll be in the certificate forms. If I want to sell my certificate, if I want to surrender my shares to some other person, we have to go to the share transfer office. Share transfer office is a expenditure, expenses. Share transfer office maintenance is a expenses. At the time of transferring the shares, they will be collecting some fee, which is called transfer fee, share transfer fee. That is the income. Collection of fee is the income. Expense is a expense. Whatever the amount that we are incurring as expenditure, that will be given as expense. Clear? Share transfer fee is the income and rental income. When it comes to expenditure, loss on sale of fixed asset, loss on sale of investment, interest on mortgage loans, goodwill written off, preliminary expense written off, fines, penalties, debenture discount written off. And one more thing, fines and penalties, it will be considered in the financial books, but not in the cost books. That will not be treated as a cost. That will not be considered for the stock valuation. That will not be treated as a cost. Okay, now appropriation, income tax, dividend distribution tax, transfer fee to general reserve, transfer fee to special reserve. This is the second reason. Third reason is under or over absorption. We are well versed in this. I made one big lengthy video on the under or over absorption. To understand better, you can watch that video. It's my recommendation. I clearly given how to identify the under or over absorption and how to treat the under or over absorption in the cost books. And one more thing before proceeding further, let me make it in one line. Under or over absorption only in cost books. That will not be there in the financial books. In financial books, we'll always account the actual expenditure. In financial books, we'll always account the actual expenditure. In cost books, what we account is absorbed overheads. Now, this under or over absorption can be happen in cost books, but not in the financial books. What we accounted in the financial books is absolutely right, absolutely correct. Let me take an example. Factory overheads. Factory overheads in financial books we are accounting 1 lakh rupees. In cost books we are accounting 80,000. Means what? Under accounted, under absorption. See, under absorption, over absorption. One more name is under accounted, over accounted. Where? Cost books. Under accounted, over accounted in cost books. 1 lakh is the factory overheads. Whatever we accounted in the cost books is 80,000. It is under accounted. Nothing but under absorption. 1 lakh rupees in the financial books, whereas in cost books 1 lakh 20,000 over accounted or over absorption. Now 1 lakh here, 80,000 here. What is going to happen? In cost books, profit will be more. In cost books, profit will be more. Why? We are accounting only 80,000. We are accounting less expenditure. If you account the less cost, profit will be more. That is called under or over absorption. Very simple. Look at here. I given here over absorption is see when the absorbed overhead greater than actual overhead. Over absorption, when absorbed overheads is less than actual overheads, then it is under absorption. Absorption is less, under absorption. Absorption is more, over absorption. Clear? Next. Stock valuation. The third one is stock valuation. Please understand. In financial books, we'll account the stock according to AS2. In financial books, we'll account the stock according to AS2. What AS2 says? Cost or NRV, whichever is lower. That is in financial books. Whereas in cost books, we'll always account using cost. There is no concept of comparing with NRV in cost books. We'll always account using cost. Cost of production is the base to value the finished goods. Whereas in financial books, cost or NRV, whichever is lower. Because of this, the difference can be possible. Are you understanding? Which we call it as overvaluation of stock, undervaluation of stock. The difference we'll identify and we'll consider in the reconciliation statement. Clear about this stock valuation? At last, depreciation. At last, depreciation. Look at here. Difference in method of depreciation. In cost books, they may follow WDV. In financial books, they may follow SLM. These are the 5 reasons which can create the difference. Number 1, notional expenses, which is considered in cost books only. Non-operating expenses, which is considered in financial books only. Third one, under or over absorption. Fourth one, stock valuation. Fifth one, depreciation. All of you clear about this? Understanding? Okay. Let me solve 2 questions based on this concept. Let me solve 2 questions based on this concept. Look at here. Practical question number 4. Please take the practical question number 4. Look at here. Important question with little bit complicated adjustments. Listen to me. See here. The following information is available from the financial books of the company. Available from the financial books of the company, having a normal production capacity of 60,000 units. The normal capacity production is 60,000 units for the year ended 31st March. Fine. Sales 10 lakh rupees, but how many units they are selling? 50,000 units. Normal production capacity, that is not the actual production. Full capacity. Normally, it is not a full capacity also. Normally, how many units they are producing? 60,000. On average production. I can call it as on average production 60,000 units. But in the month of, by the end of March 31st, how many units they are selling? 50,000. That means in the current period, how much is the sale units? 50,000. Okay, next. There was no opening and closing stock of finished units. So, if there is no opening and no closing, if there is no opening stock, no closing stock, can I say sales equal to production? Obviously. How you calculate units sold? Units sold equal to opening stock plus production minus closing stock. Opening stock plus production minus closing stock. Opening stock, closing stock is not there. Both get cancelled. Then automatically units sold equal to production. So in this question, sales is 50,000 units and production is also 50,000 units. Next, point number 3. Direct material and direct wages. Direct material is 5 lakh rupees. Direct wages is 2,50,000. That will be considered in the P&L. Actual factory expenses 1,50,000, of which is 60% are fixed. 60% are fixed. 60%, I'm sorry, 60% is fixed. Out of 1,50,000, 60% is fixed, balance 40% is variable. Next, actual administration expenses were 45,000, which is fully fixed, which is fully or completely fixed. Actual selling and distribution expenses 30,000, of which 40% are fixed. Interest and dividends received 15,000. Interest and dividend received, non-operating. It will be considered only in the financial books, but not in the cost book. Interest and dividend received on investments. It's an investing activity. It will be considered only in financial books. Okay, next. You are required to find out profit as per financial books. First, they are asking to do it as per financial books. If you want to calculate profit as per financial books, what we need to prepare? P&L account. We need to prepare the P&L account. Just let's go transaction wise and we'll decide what is to be debited and what is to be credited. Okay, listen to me. See here. First, sales. We're going to show it on credit side. There is no opening stock and closing stock. Fine. Direct material, debit. Direct wages, debit. Actual factory expenses, I already told you. In financial book, we are doing account of financial books. We'll always book the actual. In cost books, we'll book the absorb. We'll discuss that later. As of now, actual factory expenses. Actual factory expenses 1,50,000, which is to be debited. Actual administration expenses, debit. Actual selling and distribution expenses, debit. Interest on dividend received, sorry, credit. Credit in the P&L account. Credit in the P&L. So, 2 items to be created and 5 items to be debited. Look at the solution. Very simple question if you understand. One small complicated adjustment I'll explain. See, 2 items has been credited and 5 items has been debited. The net profit is 40,000. The net profit is 40,000. Okay, now it's time to look at the second requirement. Look at the second requirement. Prepare the cost sheet and ascertain the profit as per cost accounts for the year ended 31st March, assuming that indirect expenses are absorbed on the basis of normal production capacity. Indirect expenses are absorbed on the basis of normal production capacity. When you want to absorb the overheads, first we need to calculate the absorption rate. When you want to absorb the overheads, first we need to calculate the absorption rate. What is the formula to calculate the absorption rate? Overheads divided by base quantity. So that I'm telling you again, if you're not able to understand this concept, please look at the under our over absorption concept, which is full length video uploaded. Very important concept. Very important concept. Okay, now see. So indirect expenses are absorbed on the basis of normal production capacity. That means the basis is normal production capacity. Nothing but units. What is the normal production capacity in this question? 60,000. We have to observe using units. Listen. See here. I'm sorry. Look at the question. Now, let us do according to the cost books. Let me revise again. Look at this. Sales. We are going to consider at the end. In cost sheet, we are going to consider at the end. No opening, no closing. Fine. Direct material, we'll consider. Direct wages, we'll consider. If you add these two, we'll get the prime cost. We'll get the prime cost. Next. Factory expenses 1,50,000, 60% is fixed. Now, what we need to do? This 1,50,000 will bifurcate into two. That 1,50,000, okay, I'll write here. 1,50,000, we are going to classify into two categories. Variable cost, fixed cost. Fixed is 60%. That means 90,000. Fixed cost is 90,000. Variable cost is 60,000. Fixed cost is 90,000. Variable cost is 60,000. Now the point is, variable cost is based on the production. How many units we produce? 50,000. Normal production is 60,000. Actual production is 50,000. I already told you sales equal to production. 50,000 is the actual production. Okay, now this 60,000 has been charged to the 50,000 units, no doubt in that. Now the point is absorption of fixed cost. The point is absorption of fixed cost that has to be done based on normal production capacity. So the basis for absorption is normal production capacity. Now the point is 90,000 divided by 60,000, you will get 1.5 per unit. That is the absorption rate. What is the name for that 1.5 per unit? Absorption rate into actual production. That is what the absorbed overhead. How to calculate absorbed overheads? Actual quantity produced or actual base quantity into absorption rate. Actual base quantity into budgeted rate or absorption rate. Actual quantity consumed into budgeted rate. In this question, actual overheads is equal to budgeted overheads because they didn't give the budgeted overheads separately. Actual formula. The formula for the absorbed overhead is actual base quantity consumed into budgeted rate. In this question, budgeted overheads is not given, so we'll assume actual overheads equal to budgeted overheads. If there is a difference, they would have given budgeted overheads separately. They didn't given. What is the meaning of that? Actual overheads equal to budgeted overheads. Are you understanding? Are you understanding? Now the point is here. This 1.5 is the absorption rate. Absorption rate into actual base quantity. What is the actual base quantity? Actual units. What is the actual units? 50,000. 50,000 into 1.5, which comes to 75,000. So instead of accounting 90,000, we are going to account 75,000. 75,000 fixed, 60,000 variable. Together comes to 1,35,000 is the factory overhead, nothing but absorbed factory overhead. Absorbed factory overhead is 1,35,000. Are you understanding? Now look at the cost sheet. First we'll take direct material, direct wages, factory overhead. Look at this. Roman number 2, we are preparing the cost sheet. We are preparing the cost sheets here. Direct material, direct wages. Factory overheads 75,000, 1,35,000. Next. So by adding all these things, we are going to get a works cost. See here, prime cost, and then we are getting gross work cost. There is no opening WP, closing WP, so that net work cost. Now there is no gross and net. Both are equal. We will call it a works cost. After getting works cost, we need to add quality control cost, research and development cost, administration overhead related to production, primary packing and scrap income reduction. Those adjustments is not given in the question. Whatever the administration expense given, in the absence of information, we'll always assume administration overheads are general. Administration overheads are general. Okay, so that I'm calling it a cost of production. Once we get the cost of production plus opening stock of finished goods less closing stock of finished goods, both are not given in the question, so that we'll be calling it as cost of goods sold. Now it's the time to add the administration expenses. Look at the administration expenses. How much they given? I think 45,000 given in the question. They had given 45,000 in the question. Look at this. Yeah. 45,000 given, which is fixed again. So fixed has to be absorbed. Variable directly charged. Variable overhead will be directly accounted based on production. But fixed has to be absorbed. So 45,000 divided by, again the same story, 60,000 into 50,000. 45,000 divided by 60,000 into 50,000. 45,000 divided by 60,000 is 0.75 into 50,000, which equals to 37,500. Administration overheads is 37,500. Clear? Next. Actual selling and distribution expense 30,000. 40% are fixed. So now we need to classify into variable and fixed. 40% means 12,000 is fixed. Balance 18,000 is variable. This will be directly accounted. Fixed 12,000. 12,000 divided by 60,000 into 50,000. 12,000 divided by 60,000 is 0.2. 0.2 into 50,000 is 10,000. So 10,000 plus 18,000 together comes to 28,000. So the same would have been accounted here. Look at here. Look at this. 28,000, 37,500. So we'll get the cost of sales 9,50,500. Sales they already given in the question 10 lakh rupees. Profit is 49,500. All of you clear till now? All of you understanding? So please understand. So the profit as per cost books. The profit as per cost books is 49,500. The profit as per financial books is 40,000. There is a difference of 9,500. Now we need to do the reconciliation. Now we need to prepare the reconciliation. See, before proceeding further, when it comes to reconciliation, I clearly explained you what are the reasons, what are the transitions that can create the difference, and how to calculate the profit as per financial books and how to calculate the profit as per cost books. Now, when it comes to reconciliation, I'll give you one simple format. Generally, I'm against to that. I'll never say the students to by heart any concept. I always ask them to follow the logic. But many students are doing the mistakes when they're doing the reconciliation and they're facing the issues to arrive at the correct answer. So I compiled and prepared one shortcut to prepare the reconciliation, which is very simple and easy. Just for your convenience in the examination, I am suggesting this because I am not the person to suggest this kind of shortcuts. Just for examination convenience, I'm doing this. Okay, listen. Very simple. If you go by that format, you feel it's very simple to write the reconciliation. Look at here. This is the format which I am recommending as a working note to prepare the reconciliation. Look at here. Working note format to prepare the reconciliation statement. Particulars, cost books, financial books. Look at here. Particulars, cost books, financial books, difference, effect. Simple. Here it's a comparison of cost and financial books. Now, if you are starting with the cost books, see here what we are going to do in the reconciliation, we'll take profit account to cost books and we'll arrive at profit account to financial books, or we'll take profit account to financial books and profit account to cost books. So what I mean to say, if you are starting with the cost books, let me keep it like this. You are starting with, it's up to you. It's up to you. Sometimes they will specify in the question. Sometimes it's up to us. Either you can start with the cost books or you can start with the financial books. But when they specifically mention in the question to start with the cost books, you have to start with the cost books. If they specifically mention to start with the financial books, you have to start with the financial books. Now the point is, you are, let me assume that you are starting with the cost books. So first you write the cost books. Data according values according to cost books and values according to financial books. You will get the difference. That difference you will get. And then we'll discuss about the effect. It's very simple. Now see here. Effect in case of net profit. I am speaking about this curve. See, different. These two are will get from the P&L. This will get from the cost sheet. This will get from the P&L, and this is the difference between these two. Difference between these two. Once you get the difference can be positive or negative. Positive or negative. Correct? Based on this positive and negative, we'll decide the effect. Whether to add or less. Based on this positive and negative, we'll decide the effect whether to add or less. Now, when it comes to effect, again there are two scenarios. Look at here. If it is net profit, see, because profit can be possible, loss can be possible. So I am discussing the scenario. If it is net profit, even the question number 4, we are getting profit account to financial books, profit account to cost books. Okay. If it is profit, if it is net profit, simple. Positive add, negative less for debit items. See, first thing, if it is profit, debit items, credit items. There are two categories, debit and credit items. Difference creation can happen from debit and credit items. So net profit, debit items, credit items. If it is debit items, if it is debit item, positive add, negative less. If it is debit item, positive add, negative less. If it is credit item, positive less, negative add. Simple. As simple as such. Debit items means positive add, negative less. Credit item means positive less, negative add. All of you clear about this? Look at here. Now, before going to the reconciliation, let us recheck again what are the adjustment that create the difference. See here. In this question, direct material will not create the difference. Direct wages will not create the difference. What is going to create the difference is factory expenses, administration expenses, selling and distribution expenses. Sales will not create the difference. Interest on dividend. These are the 4 categories which can create the difference. This is credit item. All these 3 are debit items. Debit items positive add, negative less, difference positive and negative less. Credit items positive less, negative add. Clear? Now first let me write these 3. See here, according to, see, we are starting account to cost books. So we have to take account to cost books. According to cost book, factory expenses 1,35,000, administration expenses 37,500, selling and distribution expenses 28,000. I have taken those values. I'll do one thing. I'll place it side by side. See, according to cost books, I taken 1,35,000, 37,500, 28,000. According to financial books, go back to the P&L. 1,50,000, 45,000, 30,000. And interest and dividend, no value according to cost books. According to financial books, 15,000. All of you clear? That is how I am taking the values. Now, let's write the difference. Let us write the difference. 1,35,000 minus 1,50,000, simple. Minus 15,000. 37,500, 45,000 minus again 7,500. Okay. 28,000 minus 30,000 minus 2,000. 0 minus 15,000 minus 15,000. Now, next, right? Which is the debit and which is the credit? Debit, credit. Debit, what is the rule? Positive add, negative less. Okay. Negative less. negative, less, negative, less. Okay, credit, what is the rule? Positive, less, negative, add. Positive, less, negative, add. So negative, add. So one item to be added, three items to be reduced. Okay, look at here. Look at the cost sheet. One item to be added, that has been added, and three items to be reduced. We'll tell you. We start account to cost books 49,500. One item added, three items reduced. We'll get 40,000 account to penalty. As simple as it. Have you understand this? You follow this, you will not do the mistake. No need to think much. If you are starting account to cost books, take the cost column first, then financial column. Calculate the difference. Debit means positive, add. Negative, less. Credit means positive, less. Negative, add. All of you clear about this? Okay, now. Next, look at the fifth requirement, fifth question. Look at the fifth question. So by this, we're done with the fourth question, fifth question. What they are stating here, look at this. HK Piano Company showed a net loss. Net loss. Okay. I showed a net loss 4,16,000 as per financial accounts for the year ended 31st March. The cost accounts, however, disclosed a net loss of 3,28,000. This is account to cost book. This is the financial books and this is the cost books. There is a difference. We have to go for the reconciliation. We have to go for the reconciliation. Next. The following information were revealed as a result of security of the figures of both the set of books. Okay, now what is the information given? Factory overheads under recovered 6,000. Administration overheads over recovered 4,000. Depreciation as per financial books, as per cost books. Interest on investment not included in cost. Income tax provided. Transfer fee credit in financial books. Stores adjustment credit in financial books. Prepare memorandum reconciliation account. First, let me clarify this. In previous question, what they asked is statement of reconciliation. But here what they are asking is memorandum reconciliation. You all know the statement. Statement is we'll take account to cost books, add items will be added, less items will be reduced, we'll get the profit account to financial books. That is the statement form. Memorandum reconciliation account means conceptually no difference. Believe me, conceptually no difference. Presentation wise, instead of going statement form, we are going to write the T form, account form, memorandum reconciliation account. In account form, we are going to write. See, if it come to previous question, what we would have done? We'll take by profit account to cost books. Add items will be added here, less items shown this side. Then we'll get to profit account to financial books. Are you understanding? To profit account to financial books. That's it. As simple as it. Are you understanding? All of you. But now, in this question, they had given the loss. They had given the loss. So when it is loss, we have to write it on the debit side. We'll write to loss as per cost books. To loss as per cost books. And add items will be added this side and less items will be reduced this side. And we'll get to loss as per financial books. That's it. Just change in format. We are writing in the T form. That's it. Don't apply your accounting rules. Don't apply your accounting rules here. Just present it as a, account our concepts. Okay. Now look at the question. Factory overheads under accounted or under recovered in which books? Cost books. I already told you. Under over. This happens only in cost books. Financial books always will account the actuals. In financial books, will always account the actual expenses. This under or over of happens only in the cost books. Okay, under recovered in cost books. Next, administration overhead over recovered in cost books. Okay, now here they mention depreciation as per financial books, depreciation as per cost books. We'll consider. Next, interest on investment not including cost books. That means it is there only in the financial books. Income tax provided in financial books they provided, but we won't consider in the cost books. Income tax will not be accounted in the cost books. It will be accounted only in the financial books. Okay, next. Transfer fee credit. Transfer fee credit in financial books, which is called as income. Next, stores adjustment credit in financial books, which is called as income. Income is debit item or credit item? Obviously credit item. Are you understanding? Now, listen to me. what we are going to do here, slightly rule is going to change, because instead of profit they given the loss. Instead of profit they given the loss. The rules is going to change. Debit and credit rules is going to change. What is the change? Debit positive less, negative add, slightly change. So okay, look at here. Okay, look at here. Practical question number 5. When it is net loss, when it is net loss, positive less, negative add, positive add, negative less, ulta, when there is a loss. See, if you remember this one thing, it will become easy to remember the second one. Okay, now see here. Let me write the columns. See, first I am going to start with the cost books. Loss as per cost book. In this question also, I am going to start with the loss as per cost books. So let me write the values first. Let us understand these values. See here. Here what they stated. Here what they stated. Factory overheads are under accounted. Factory overheads are okay. Factory overheads are under accounted. If see, we don't know how much is the total. We don't know how much is the total. We know only under accounted amount. What they gave in the question is only under accounted amount, that is 6,000. But we don't know what is the total. What is the actual, we don't know. So that I'm assuming it as X. Actual we don't know. So that I'm assuming it as X. Look at here. Look at here. Financial books X. How much is under accounted? 6,000. X minus 6,000. Are you understanding? We don't know the actual amount, so that I'm assuming it as X. Factory overhead, first item is factory overhead. X amount in the financial books under accounted by 6,000. So X minus 6,000. Clear? Next. Administration overheads. Financial books X. We don't know the actual, so that I'm taking X. But over accounted. Over accounted by how much? 4,000. X plus 4,000. Are you understanding? Next. Depreciation according to financial books 1,20,000. According to cost books 1,30,000. Next. Interest on investment not including cost. It will not be included in the cost books, but in financial books 20,000. Accounted in financial books. Next. Income tax provided in financial books 1,20,000 but not in the cost books. Transfer fee credit in financial books 2,000 but not in the cost books. Stores adjustment credit in financial books 2,000 but not in the cost books. So this is the values given. Okay. Now let us take the difference. Let us take the difference. You tell me X minus 6,000 minus X. X minus 6,000 minus X. See, I'm telling again. I am starting, I'm going to take the loss as per cost books. I'm going to take the okay. I'm going to take the loss as per cost books, so that I take in cost books first and then I take in the financial books. Now it's time to calculate the difference. Look at here. X minus 6,000 minus X. X minus 6,000 minus X. Minus X plus X will get cancelled. Result is minus 6,000. X plus 4,000 minus X. Again X will get cancelled, plus 4,000. 1,30,000 minus 1,20,000. So positive 10,000. 0 minus 20,000 minus 20,000. 0 minus 1,20,000 minus 1,20,000. 0 minus 2,000 minus 2,000. 0 minus 2,000 minus 2,000. Okay, now we have to write debit and credit. Factory overheads debit, administration overhead debit, depreciation debit, interest on investment credit, income tax debit, transfer fee credit, stores adjustment credit. Clearly stated in the question. What is the rule now? We are in the loss. The companies are having the loss. When it is a loss, debit positive less, negative add. Okay, debit positive less, negative add. Look at here. First let us write the debit. Debit negative add. Positive less. Positive less. Again income tax debit negative add. We're done with the debit items. Credit, what is the rule? Positive add, negative less. Credit negative less, negative less, negative less. So finally what is the conclusion? What is the conclusion? See here. 2 items to be added. 6,000, 1,20,000. 5 items to be reduced. Okay, check with the answer. Question number 5. Look at here. They are preparing the memorandum reconciliation account. I told you na. We will start with loss as per cost books. Loss as per cost books. What all the items to be added means 6,000, 1,20,000. What all the items to be reduced means 4,000, 10,000, 2,000, 20,000, 2,000, 2,000. We get the loss as per financial. Simple. You go by the format. And for your convenience, this PDF without fail, I am going to attach in the description, and I am going to add the link of the under or absorption concept. Please go through that video. Very, very useful. Before solving this question, please go through the under or absorption, which is the concept of the overheads. Okay, and one more thing, if you like these concepts, please subscribe my channel, number one, because many of the viewers are not subscribed my channel. Please subscribe the channel, which will be act as a fuel to me. And whatever the doubts that you are having, please mention in the comment section. Definitely I'll respond to that. Thank you so much.